Avoid this terrible mistake if you're wanting to move over a lump sum into IUL. Welcome, my name is Daniel McCluskey. I've worked with families from a few $100,000 in assets to a few million, to one family with an over $20 million settlement, reduce their taxes to zero using the same strategy the rich have been using for centuries. But it can absolutely blow up in your face if it's not done carefully. If I want to move over $1 million into an IUL policy for cash growth, I can do that. But I have to comply with TEFRA of 1982 and DEFRA of 1984. These are the tax codes that declare what is the minimum amount of insurance that I need for moving over that $1 million so that it's still considered life insurance and it's not considered a taxable event, otherwise an investment, and they determine this based on my age, my gender, and my health. So many times people end up with way too much death benefits. They're compliant with the tax codes, but they don't have the least amount that the tax code will allow. So they'll actually have a little bit more. And then because they have more, naturally, the cost of insurance, the other fees are going to rise. So this might still even perform okay, but it's not going to perform optimally. Again, we want the least possible amount the IRS will allow us to have. So that's the first thing, is complying with those and getting the minimum death benefit. Second is we have to comply with TAMRA of 1988. This says how fast we can get our lump sum into the policy, meaning we're not going to fund this just in 1 year. We're going to split that up. I can move my $1 million in one lump sum into an IUL if I wanted to, but if I'm doing this for the least amount of insurance, this is going to create what's called a modified endowment contract. It's no longer going to be treated as life insurance, and now it's going to be considered an investment in terms of its tax treatment. Now, when it comes to tax-free growth, tax-free access, we're not going to have this benefits. That's what we wouldn't want. If we are trying to optimize for transferring this money to heirs and using the tax-free transfer and the blossoming into a higher death benefit, then this could be a good option. But generally that is not what people are looking for. They're wanting to use this while they are alive, move money over so they can take tax-free income or take tax-free loans from the policy. So generally, if I'm wanting to move over that $1 million, I need to expect to be doing that over 4 to 6 years. If you're moving over a lump sum, you need to expect to be doing it pieces at a time. Now, what if you don't want to wait? What if I don't want to wait when I'm moving over that $1 million? We're actually in luck. What a lot of insurance companies have, not all of them, but some of them do, is what's called a premium deposit fund or a premium deposit account. Essentially what I'm able to do is, let's say it's the $1 million. I can send that over to the insurance company and they will fund the policy for me over that 4 to 6 years. But while that money is waiting to go in, they'll put it in an account that's guaranteeing an interest rate over that time. Some of them actually right now are over 5%. So this can be a great option if you're not wanting to send the check in each year, as you just send it all to the insurance company. They're going to credit you a certain rate, and then they're going to do the funding each year for you to comply with the tax codes. If you are considering the best vehicle on the planet for your lump sums in IUL when done properly, you need to do this very carefully. Your agent needs to comply with the 3 tax codes in the 80s stated previously. If they do not, you are risking 3 things. That is your tax-free status with funding it too quickly. That is your returns if they have too much death benefit. And if they have way too much death benefit, you actually risk the policy lapsing due to having such high death benefit in the beginning and not enough cash value in the end. Do not just use your friend or your relative who sells life insurance or trust them to structure and then continue to keep up with the intricacies of IUL. Use a professional, ask the hard questions. This is something that matters a lot from the very beginning. You have to get it right. If you'd like to look at what a lump sum for you could look like instead of a maximum funded index universal life insurance contract, and how much the underwriters would actually even allow you to put in as a percentage of your net worth, feel free to book a 20-minute consult with me below. I'm happy to do that. I look forward to meeting with you. Otherwise, subscribe. I release videos like this 5 days a week, jumping into the nuances of IUL. I will see you in a future video. Bye-bye.